All right, so today we're diving into some interesting stuff happening over in the European stock market.
Yeah, sounds good.
We've got this new report from Morningstar.
Uh-huh.
It came out March 18th of this year, so 2025.
Okay.
And it highlights all these companies that their analysts are saying are undervalued right now.
Interesting.
Our mission today is to figure out what you should care about in all of this.
Yeah.
Help people understand, what's going on in the European market without having to read all these boring financial reports.
Right, exactly. We're trying to sort of cut through the noise and get to what really matters.
Exactly.
So yeah, we're looking specifically at Morningstar's equity research.
Uh-huh.
And in particular, this list they put out called 26 newly undervalued stocks for the month.
Okay.
And they have this star rating system.
Yeah.
Which is nice and simple.
Yeah.
5 stars means a stock is really undervalued.
Yeah.
4 stars also means it's undervalued, but maybe not quite as much.
Right.
3 stars means it's fairly valued.
Okay.
And 1 and 2 stars means it might be overvalued.
So you want to stay away from those?
Yeah, probably a good idea.
So to put all of this into context, the overall European market, as measured by the Morningstar Europe Index,
Right.
dipped just a little bit, 0.25% recently.
Okay.
Not a huge drop. But here's the thing. That tiny little dip means that the entire European market is now what Morningstar considers to be significantly undervalued.
Wow.
We're talking a 63% discount to their fair value estimate.
Seriously.
Yeah. It's
that's-
like the whole market is on sale right now, at least according to their analysis.
That's pretty wild, and that's market-wide, so not just a few specific companies.
Yeah, it's crazy.
It's pretty broad.
And when you actually look at the numbers
Yeah.
of the 298 European stocks that Morningstar covers,
Uh-huh.
a full 42% have those undervalued ratings.
Wow, over 40%.
Yeah, so either 4 or 5 stars.
So a pretty big chunk of the market.
Huge. And then another 39% are seen as fairly valued, and only 18% are considered overvalued.
So small minority.
Yeah, it really seems like Morningstar's analysts are finding a lot of good deals right now in Europe.
I mean, yeah, it paints a pretty interesting picture, for sure.
Yeah, and if we just focus on the last month,
Right.
they found 26 stocks that just became newly undervalued,
Hmm.
while 13 moved into that overvalued category.
Okay, so things are definitely moving around.
Yeah, definitely.
Okay.
And we also saw some movement within the undervalued group.
Oh, really?
Yeah, 4 companies that were previously 4 stars
Uh-huh.
jumped up to that top 5-star rating.
So things are getting even more undervalued.
Exactly. So let's dive into some specifics now.
Okay, sounds good.
Let's start with the 5 companies that Morningstar is saying are the most undervalued right now.
Okay, the new 5-star company.
Brand new 5-star company.
Gotta love those 5 stars.
Exactly. So first up, we have Rheinmetall,
Rheinmetall, love
ticker symbol RHM.
Got it.
Now, this one's interesting because it had a huge positive return in the last month.
Oh, wow, in a down market.
Yeah, exactly. 55.63%.
That's a big jump.
Massive. And if you look back even further, it gets even crazier.
Mm-hmm.
Over the past 3 months, it's up 135.73%.
Seriously.
And get this, over the past year, it's up a whopping 206.33%.
That's incredible.
And
Well, what's driving that kind of growth?
Well, here's where it gets really interesting.
Okay, I'm listening.
During this past month, Morningstar significantly increased its fair value estimate for Rheinmetall,
Like, how much are we talking?
from EUR 870 all the way up to EUR 2,220.
Wow, they more than doubled it.
Yeah, so even after that huge price surge,
Mhm.
it's still trading at a 35% discount to this new, much higher fair value.
So there's still room to grow, potentially.
That's what Morningstar seems to be thinking.
And when they make a change like that to the fair value estimate,
Right.
it means they're seeing something really fundamental changing in the company's long-term prospects, right?
Exactly. It's not just a little blip. It's like they're reassessing the whole company.
So what does Rheinmetall actually do?
So they're in the aerospace and defense industry.
Okay, so like defense contractors and stuff.
Yeah, exactly. And Morningstar considers them a large growth company and says they have a wide economic moat.
Which is a good thing, right?
Yeah, a wide moat means they have a really strong competitive advantage that's going to last for a long time.
Like a castle with a big moat around it, hard to attack.
Exactly. And actually, Morningstar put out a whole separate story
Oh, wow.
that goes into detail about this fair value upgrade for Rheinmetall.
So if people really want to get into the weeds on that
You
one,
can check that out.
you can find that report.
All right, so moving on to our next new 5-star stock.
Okay, shoot.
This one's Carnival,
Carnival. Okay,
ticker CCL.
got it.
And this one is a complete opposite of Rheinmetall in terms of performance.
Oh, really? How so?
It's down 24.28% over the past month.
Ouch. So pretty big drop.
Yeah, pretty rough. And that trend keeps going if you look further back.
Mm-hmm.
The 3-month return is also a loss of 24.70%.
Okay, so it's been struggling for a while.
But here's the interesting thing.
What's that?
Over the past year, it's actually up 20.24%.
Oh, so it's had some good times too.
Yeah, so it's not all doom and gloom.
So where does Morningstar see it now?
Right now, they think it's trading at a 45% discount to their fair value estimate.
45%. Wow.
Yeah, which is GBX 2,560.
So they clearly think it's undervalued.
Definitely.
What does Carnival do?
So they're in the travel services industry.
Okay, so cruises and things like that.
Yeah, exactly. And they're classified as a large core stock.
Uh-huh.
And Morningstar says they have a narrow economic moat.
So not as strong of a competitive advantage as Rheinmetall.
Right. And here's the other thing.
What's that?
They've given it a high uncertainty rating.
Which basically means they're not super sure about what's going to happen with Carnival.
Yeah, they're saying there's a lot of potential outcomes.
Which makes sense. I mean, the travel industry's been through a lot.
Yeah, and who knows what's going to happen next.
Exactly. Things could go really well or they could go really badly.
Right. So it's a bit of a gamble.
Yeah, you got to be comfortable with that uncertainty.
Yeah. All right, let's move on to our third new 5-star stock.
Okay, number 3.
This one is Melrose Industries.
Melrose Industries. Okay,
Ticker MRO.
got it.
And it's another one that's been down recently.
How much are we talking?
It's down 18.29% over the past month.
Another double-digit drop.
Yeah, and it's down 4.26% over the past 3 months.
So kind of similar to Carnival in terms of recent performance.
Yeah, but unlike Carnival, it's down 13.44% over the past year.
So it's been down for a while.
Yeah, but here's the twist.
Okay, I love a good twist.
Morningstar actually increased its fair value estimate for Melrose during this past month.
Oh, interesting.
Yeah, from GBX 740 to GBX 800.
So they're actually more bullish on it now, even though the price is down?
Exactly. So even after the price drop, it's now trading at a 34% discount to their new estimate.
Okay, so they really like this company.
They seem to.
What does Melrose do?
They're in the specialty industrial machinery sector.
Okay, so they make like specialized equipment for other industries.
Yeah, things like that. And they're classified as a mid-growth company,
Uh-huh.
and they have a wide economic moat, just like Rheinmetall.
So strong competitive advantage again.
Yep. And their uncertainty rating is medium.
Oh, okay. So somewhere in between Carnival and Rheinmetall.
Exactly.
So it sounds like Morningstar is fairly confident about Melrose, but there's still some unknowns.
Exactly.
Okay, so the fourth company to join the 5-star club.
Okay, hit me with it. Is
Great.
Puma.
Puma. Okay, the shoe company?
Yeah, exactly.
Wait.
Ticker symbol PUM, right?
No.
And Puma's been having a pretty rough time lately.
Yeah, I can imagine retail's been tough.
Yeah, they're down 18.51% over the past month.
Ouch. So another big drop.
And it gets worse.
Oh,
They're down 47.22% over the past 3 months.
wow, that's a huge drop.
And 40.23% over the past year.
So it's been a pretty steady decline.
Yeah, definitely. And here's the thing that really stands out to me.
Okay, tell me.
Morningstar actually decreased its fair value estimate for Puma during the month.
Oh, wow. So they're less optimistic about its future.
Yeah, they lowered it from ER 48 down to UR 46.50.
So they're basically saying they don't think it's worth as much as they used to.
Exactly. But even with that lower fair value estimate, the stock is still trading at a 48% discount.
So it's like super undervalued even by their lowered standards.
Yeah, it's a bit of a head scratcher.
I mean, what's going on with Puma?
Well, they're in the accessory industry.
So athletic wear and all that?
Yeah, exactly. And they're a mid-value stock.
Okay.
And unlike some of the other companies we've talked about, they don't have an economic moat, according to Morningstar.
So they're more vulnerable to competition.
Exactly. And they also have a high uncertainty rating, just like Carnival.
So a lot of potential for things to go wrong.
Right, I guess.
True. But it sounds like Morningstar is a little more worried than excited about this one.
Yeah, I think that's fair to say.
Okay, so we've got one more new 5-star company to cover.
Right. The last one on our list
Let's hear it.
is ASOS.
ASOS. Okay, the online retailer.
Yeah, ticker ASC.
Got it.
And ASOS had the biggest drop of all the new 5-star stocks in the last month.
Oh, wow. How bad are we talking?
Down a whopping 33.90%.
Ouch, that's gotta hurt.
Yeah, and if you look at the longer term,
Yeah.
it's down 40.08% over the past 3 months.
Okay, so it's been a rough few months.
Yeah, and 28.70% over the past year.
So it's been a downward trend for a while.
Definitely. But despite all of that,
Oh,
Morningstar thinks it's significantly undervalued.
really?
Yeah. They're saying it's trading at a 62% discount to their fair value estimate.
62%.
Yeah, which is GBX 640.
So they think it's got a lot of room to grow.
That's what they're saying.
So what's ASOS' story?
Well, they're an internet retail company.
Okay, so online shopping?
Yep. And they're classified as a small value stock,
Yeah.
and they don't have an economic moat.
So facing a lot of competition.
Exactly. And maybe not surprisingly, they have a very high uncertainty rating from Morningstar.
So that's even higher than a high uncertainty rating.
Yeah, it's the highest level of uncertainty they give out.
So basically they're saying anything could happen with this company.
Pretty much.
High risk, high reward, maybe.
Yeah, you got to have a strong stomach to invest in this one.
I guess so.
So we've covered all the new five-star stocks.
Uh-huh.
And as you can see, the reasons they've become undervalued are all over the place.
Yeah, it's a pretty diverse group, for sure.
Some have dropped in price recently.
Right.
Some have seen their fair value estimates increase.
Yeah, even though their price has gone down.
Exactly. And some have a combination of both.
So it's not just one simple explanation.
Nope.
And it's important to understand the different metrics Morningstar uses, right?
Yeah, definitely.
So like that star rating, it's their quick and easy way of telling you if they think a stock is cheap, fairly priced, or expensive,
Right.
based on all their fancy analysis.
Exactly.
And then you've got the fair value estimate,
yeah,
which is their best guess at what the company's actually worth.
based on all their research.
Right.
And then there's a uncertainty rating,
Yeah.
which tells you how confident they are in that fair value estimate.
So a low rating means they're pretty sure about it.
Mm-hmm.
And a high rating means it's more of a guess.
Right. So it's important to look at all three of those things.
Exactly. You can't just focus on the star rating.
Right. And it's also important to remember that a stock can become undervalued for a whole bunch of different reasons.
Yeah, we've seen that already.
Sometimes it's because the whole market is down.
Right.
And even good companies get pulled down with it.
Like a rising tide lifts all boats, but a falling tide sinks them all.
Exactly.
Or maybe it's because of something specific to the company
Yeah.
that the market is overreacting to.
Or maybe it's because the company itself has changed.
Like they've got a new product or new CEO or something.
Right. And analysts are recognizing that change and giving them a higher valuation.
Like we saw with Rheinmetall and Rolls-Royce.
Exactly.
So it's not always a bad thing for a company to be undervalued.
Nope. It can actually be a great opportunity to buy low.
If you know what you're doing.
Exactly. And speaking of knowing what you're doing,
Yeah.
it's important to remember that all of this information is based on Morningstar's analysis as of March 18th, 2025.
Right. It's a snapshot in time.
Yeah, the market can change really quickly.
Oh, yeah.
New information comes out all the time.
And analysts change their minds all the time.
Exactly. So don't take this as gospel.
Right. This is just a starting point.
It's a way to get you thinking about potential opportunities.
And potential risk.
Exactly.
You got to do your own research before you invest in anything.
Absolutely. We're not giving out financial advice here.
Yeah.
We're just trying to help you understand what's going on in the European market.
And hopefully give you some ideas for further research.
Exactly. So now that we've covered the five-star stocks, let's shift gears a bit and talk about some of the bigger companies that have moved into the four-star category.
So still undervalued, but not quite as much.
Exactly.
Okay, I'm ready.
All right. So first up, we have Novo Nordisk.
Novo Nordisk. Okay,
Ticker symbol NOVO.
got it.
This is a big pharmaceutical company,
Yeah, I've heard of them.
and they had a negative return in the last month,
Oh, really? How much?
down 6.37%.
Not great, but not terrible either.
Yeah, and they've also had losses over the past 3 months,
How bad are we talking?
down 28.77%.
Okay, so a bit more significant.
And over the past year, they're down 39.22%.
So, yeah, so it's been a rough year for them.
Yeah, definitely. But even with all that, Morningstar thinks they're trading at a 14% discount to their fair value estimate.
So still a good deal.
That's what they're saying.
And what is their fair value estimate?
DKK 640.
Okay, so they think it's worth quite a bit.
Yeah.
So what does Novo Nordisk do?
They're a drug manufacturer.
Okay, so they develop and sell medications.
Yep, and they're a large growth company,
Mm-hmm.
so they have a lot of potential for future growth.
And do they have an economic moat?
They do. They have a wide economic moat.
So they're well protected from competition,
Exactly. But they do also have a high uncertainty rating.
even with a wide moat.
Yeah. Which is interesting.
Why is that?
Well, it's probably because the pharmaceutical industry is so complex.
Yeah, I can
There's a lot
imagine.
of regulation and patents expire.
Which can hurt their profits.
Yeah, and then there's the whole drug development pipeline.
Right. It's really hard to predict which drugs are going to be successful.
Exactly. So even though Novo Nordisk has a wide moat, there's still a lot of uncertainty about their future.
Yep.
Okay, next up we have Ericsson.
Ericsson. Okay.
Ticker symbol RXBB,
Got it.
and they're a big player in the communication equipment space.
Okay, so like telecom equipment
Yeah,
stuff.
exactly. And they actually had a pretty small negative return last month,
How small are we talking?
just 2.39%.
Okay, not too bad.
But they did lose 7.98% over the past 3 months.
So a bit of a mixed bag.
Yeah, but
Oh.
over the past year, they've had a really strong return,
Outside
up
of-
54.94%.
Wow, that's impressive.
Yeah, so they're not doing too bad overall.
So where do they stand now, according to Morningstar?
They're trading at a 12% discount to their fair value estimate,
Which is what?
SEK 95.
Okay, so decent discount.
Yeah, and Morningstar classifies them as a large value stock.
Mm.
And interestingly, they say they don't have an economic moat.
Really? Why not?
Well, the communication equipment sector is really competitive.
Yeah. Okay.
Technology changes really fast,
Uh,
and new competitors are popping up all the time.
so it's hard to stay ahead of the game.
Exactly, and their uncertainty rating is medium.
So there's some risk, but not too much.
Right.
Okay, so next up we have HSBC Holdings.
HSBC Holdings, all right?
Ticker symbol?
HSBA.
Okay.
And unlike the last two companies we talked about,
Right.
HSBC actually had a positive return in the last month,
Oh, nice so much.
up 2.73%.
Okay, not a huge jump, but still positive.
Yeah, and over the past 3 months, they're up 20.15%.
Okay, now we're talking.
And over the past year, they've had a really impressive return,
Lay it on me.
up 62.15%.
Wow, that's awesome.
Yeah, they're doing really well.
So why are they even on this list?
Well, even though they've been performing well,
Uh,
Morningstar still thinks they're undervalued.
Interesting.
Yeah, they increased their fair value estimate for HSBC during the month,
Okay, from what to what?
from GBX 878 to GBX 980.
So they're even more optimistic about them now?
Yeah, and right now, the stock is trading at a 9% discount to that new fair value.
Okay, so there's still some upside potential.
That's what Morningstar is saying.
So what does HSBC do?
They're a bank,
A bank.
yeah, a big global bank, and Morningstar classifies them as a large value stock,
Okay.
and they say they don't have an economic moat.
Interesting. Why not for a big bank?
Well, banks are really sensitive to the overall economy.
Yeah, that makes sense.
They're also affected by interest rate changes,
Right.
which are set by central banks.
So it's not really something they can control.
Right, and then there's all of the regulation.
Yeah, banks are heavily regulated.
So all of those things make it hard for any bank to have a really strong and lasting competitive advantage.
Okay, I get it.
And their uncertainty rating is medium.
So a bit of risk, but not too much.
Right.
All right, what's next?
So our next large cap 4-star stock is BP.
BP. Okay, the oil company.
The ticker symbol BP.
Got it.
And they had a little dip last month, down
Mm.
4.03%.
Okay, not too bad.
But over the past 3 months, they're actually up 15.75%.
Oh, okay. So doing better over the longer term.
Yeah, but they are still down 6.19% over the past year.
It's a little volatile.
Yeah, and Morningstar increased its fair value estimate for BP during the month.
Oh, interesting again.
Yeah, from
Yeah.
GBX 490 to GBX 511.
So they're liking it more now.
Yeah, and the stock is currently trading at a 14% discount to that new estimate.
Okay.
So BP is in the oil and gas industry,
Of course.
and they're a large value stock, and they don't have an economic moat, according to Morningstar.
So another big company without a moat.
Yeah, and I think that's probably because the energy sector is so unpredictable right now,
Yeah, with the transition to renewables and everything.
and their uncertainty rating is high.
So a lot of potential for things to change.
Yeah, either for the better or for the worse.
Okay. I'm sensing a theme here.
Yeah, a lot of these big companies are facing a lot of uncertainty.
It's a volatile world out there.
That's for sure.
All right, so we've got one more large cap 4-star stock to cover.
Right, our last one for today.
Let's hear it.
This is Rolls-Royce Holdings.
Rolls-Royce, okay. The engine maker?
Yeah, ticker symbol RR.
Got it.
And they had a pretty amazing month.
How amazing are we talking?
Up 25.88%.
Wow, that's a huge jump.
Yeah, really strong performance.
So what's driving that growth?
Well, they've been doing well for a while now. Over the past 3 months, they're up 38.24%.
So it's not just a one-month wonder.
Right. And over the past year, they're up a whopping 108%.
Seriously, over double.
Yeah, incredible gains.
So what does Morningstar think about all this?
Well, they've made a big change to their fair value estimate for Rolls-Royce. They increased it from GBX 380 to GBX 960.
Wow, that's a massive jump.
Yeah, more than double.
So they're clearly seeing something big happening with this company.
Yeah, they're really bullish on it.
Even after that huge price surge, though,
Uh-huh.
it's still trading at a 16% discount to its new fair value.
Yeah. So they think it still has room to grow.
Interesting.
So Rolls-Royce is in the aerospace and defense sector.
Okay, so similar to Rheinmetall.
Yeah. And they're a large growth company.
Yeah.
And they have a narrow economic moat.
So some competitive advantage, but not a huge one.
Right. And their uncertainty rating is high.
So even though Morningstar likes this company a lot,
Yeah.
there's still a lot of uncertainty about their future.
Exactly. And I think that's probably because the aerospace and defense industry is so influenced by governments and geopolitics.
Yeah, you never know what's going to happen with those things.
Exactly.
So we've covered a lot of ground today.
Yeah, we have.
We've talked about 5-star stocks and 4-star stocks.
Large cap stocks and small caps.
Companies with wide moats and companies with no moats.
High uncertainty ratings and low uncertainty ratings.
It's been a whirlwind.
Yeah. But hopefully you've learned a little something about the European stock market.
And maybe gotten some ideas for further research.
Exactly. And remember, all of this is just based on Morningstar's analysis.
As of March 18th, 2025.
Which could be ancient history by the time you hear this.
Yeah, things change fast.
Well, do your own research.
Absolutely.
And don't blame us if you lose all your money.
Yeah, we're not financial advisors.
Just two people trying to make sense of the world.
One stock at a time.
Exactly.
So what I think is really interesting about all this is that it shows how much things can change.
Yeah.
Even for big, well-established companies.
Mm-hmm.
One day you're a 5-star stock, the next day you're a 4-star stock.
Or a one-star stock.
Or a 1-star stock, exactly.
And it's not always because the company itself has changed.
Right? It could just be the market's perception of the company.
Or the overall economy.
Or a million other things.
So it's important to stay informed.
And to be adaptable.
Yeah. Don't get too attached to any one company.
Because things can change really fast.
That's for sure.
So I guess the question for our listeners is, what are you going to do with this information?
Yeah, what piqued your interest?
What rabbit hole are you going to go down?
Are you going to dig deeper into any of these companies?
You're going to look at their financials?
Yeah.
Read their annual reports?
Talk to their management teams?
Do some industry research?
Yeah, there's a lot you can do.
And hopefully this episode has given you a good starting point.
Exactly.
So go forth and do your own deep dive.
Yeah. Happy investing, everyone. Good luck out there.